This is a great group, and I'm gonna save everybody from the awkwardness that is this like best friend feud that's happening right now. Welcome everybody on Facebook. We're live. This is the Not Your Average Investor Show. I'm your host, Pablo Gonzalez. My co-host as always, Greg Cohen. Say hello, Greg.
Hey everybody, thank you for being here.
And today we have a special returning guest. Some people call him the Dreamweaver. Other people call him the Troublemaker. He is the co-founder and president of JWB, who's here to give us a market update. Alex Sifakis. Say hello, Alex.
What's up, guys? Happy to be here.
Always good to have you on here. We know you're good for a couple of quotes. So in the meantime, if you haven't been here before, I have a little bit of housekeeping I got to get through. We want you to correspond with us. We love seeing the messages here online, where people are from. We want you to ask questions. We want you to chat with each other. Just so you know, you can chat with us by clicking that chat box. And if you want to have everybody else read what you're saying, you need to hit the drop-down menu that says all panelists and change it to all panelists and attendees. And that way everybody can see what you're writing. If not, we just see it, which is great. We love seeing it, but we want you to chat with each other. And if you want a question to be asked on the show, we try to get to the questions on air right now. And if not, we hit them in our Thursday episode where we have a bunch of Q&A. But there is a question screen down at the bottom of your tab here. It says Q&A. And there you can put in these questions and it pops in. We keep track of all of it. We'll get back to you no matter what happens. And it'll be a lot of fun. And finally, if you have a very specific question, if you want to know exactly how rental income properties can fit into your portfolio and you want to get on the call and have that personalized attention, go to chatwithjwb.com, get on the phone with our team. It is an informative process. The first call is always a informational research finding. Make sure that this is what you want. Make sure if it's a good fit for you. And I recommend anybody to just go to chatwithjwb.com, pick out a time slot that works for you, and just get the conversation going if you like what you're hearing now. And I think that you will. So without further ado, Alex, you are joining us to give us an update on the Jacksonville market. I hope no pressure. Let's start with what everybody, the natural question. How is housing pricing doing right now in Jacksonville?
So pricing is doing great. So, no one really knew what was going to happen, obviously, with COVID affecting the market, but inventory has still been low and sales have been really strong. So to give you the actual numbers, in April, the median home price in Jacksonville was $250,000. Which was up 8.7% year over year from last April. So, obviously 8.7% is a huge increase. And that was a little bit due to the fact that April was kind of artificially low last year. When you get data month to month, sometimes, so one month can be high, one month can be low. So you really try to smooth it out as much as possible. But overall, $250,000, that was what the high was last year. So in April, we're already at our yearly high from last year. And typically we don't see a high until June or July. So we still expect prices to continue to increase, probably just a little bit throughout the summer. So pricing has still been holding really, really strong. And anecdotally, just talking to a lot of different investors that are renovating and selling houses, real estate agents, even though sales volume is down because inventory is still down, because listings are down, stuff is still moving. So you're seeing, when properties are hitting the market, if it's a good property and it's priced right, it's getting a contract in a week. So we haven't seen days on market go longer. It's been great. The market has been holding really, really strong.
That's great news. I want to add some context to that. If you are looking to buy a rental income property, is the housing pricing, the current housing pricing, how should you be considering that? Like, is the fact that it's going up in price good news, bad news, indifferent?
So the best way to answer that question is really indifferent. So in the long run, you can expect home prices to appreciate. And that's why you want to buy in a market that has long-term home price appreciation. For instance, Jacksonville, long-term home price appreciation is historically over the last 50 years has been over 4%, where you might, a lower growth market in the Midwest might be more like 1% or 2%. So you want to buy in the right market where you can plan on getting appreciation over the long term, but you don't really care what pricing is doing month to month or even year to year. If you're in it for the long haul, you've got, your long-term debt on the property and you're getting rental income, it doesn't matter if the property is worth 240 or 250 at any given month, because you're not selling it. You're in it for the rental income. You're in it for a long haul. So, so the month-to-month fluctuations don't matter, but it is good to know, that you picked the right market and that the market is increasing in general. So what you asked a question about, is it good or bad for investors? Well, if you've already bought a property, anytime the market's going up, that's great. If you're still looking to buy, then maybe you don't want it to go up as fast, so you can buy your properties at a lower price point, which gives you higher returns. So it really depends on where you're at in filling out your portfolio, if it's a good or bad thing. But the main takeaway is that in Jacksonville, the market is still strong, and you can still get properties that can give you a great cash flow, and you still get that potential for long-term price appreciation. So all good news from the data about real estate, despite the headlines that you read and the concerns, rightfully so, concerns about COVID.
And Alex, let me just add a couple of things there. So, the number one most important thing when you're buying rental properties is to get positive cash flow. And like Alex was saying, the rent and the prices in Jacksonville allow you to get that. That is very different than a lot of other markets out there. There's really only a handful of markets across the country where you can get positive cash flow, including all of your property management fees that you would pay in a neighborhood that you want to own properties, right? So we have that in Jacksonville. But the other thing, Alex, I just wanted you to kind of explain, this is something that I talk about a lot, and people still don't get it, or it's still hard for them to comprehend. But I talk about the fact that real estate appreciation is not speculative if you hold on for a market cycle, if you hold on for a 10 to 20 year period. Can you go a little bit more in depth into that? Because that is so critical to overall returns for an investor, if you know that it's not speculative. So let's talk about that a little bit.
The easiest comparison to make is to the stock market, right? In the long term, the stock market goes up historically, even though it fluctuates up and down. And so when you look at the numbers, homes in Jacksonville have appreciated over the last 50 years at an average of 4% a year. And if you break it down to 5 years, well, maybe homes, in 2008 was really the only time when homes went down in price. If you looked at it from 2006 to 2011, home prices went down. But if you look at it from 2006 until now, home prices still went up. And so in the long run, even though you might have ups and downs, when you hold on over a period of time, call it 10 years, 20 years, whatever that market cycle is, then those homes will appreciate. And we live this because we bought homes in 2006 that we still own. And they've been great investments, even though, in 2012, when we looked at it, it didn't look like we had any or very much equity. Those properties were still kicking off cash flow. And now we can sell them for a profit. So when you buy into the right market and you're getting a property that's cash flowing, you can count on that appreciation in the long run. You don't have to worry about what the property is going to be worth next week or next month or next year.
Yeah, one of the stats that absolutely shocks people is that what you talked about, how prices tend to repeat themselves, or appreciation rates tend to repeat themselves every 10 or 20 years. If you go back from the year 2001 all the way to 2020, where you endured that 35% plus drop in 2008 to 2011, your prices from 2001 to 2020, the average appreciation rate is still over 4%, just like Alex was talking about, which just substantiates the fact that if you're in this game for a long time, you can bank on home price appreciation, and therefore you should take it into consideration when choosing your market. Alex, take people back to 2006 when we were a couple of young guys just buying 40 rental properties. We bought them with cash flow, and then we saw the market dip. Just, take us down memory lane. And we didn't have the insight to know how markets actually fare. What were we thinking when we owned 40 rental properties and had all of our parents' money in this, and the little money we had? What were we thinking then?
There was some scary times in 2008. I'm not gonna lie, but we had the long-term debt in the properties, and they were still cash flowing or breaking even. But yeah, no, that wasn't always fun. Some sleepless nights back then.
Well, the great thing is now we've been through it and we know how this works. We were just going off of books and that what we learned. And so we hadn't actually seen it in practice at that point. And there were some scary times. But when you invest in the fundamentals, you invest in rental properties, which is a consistent asset class, and you invest in cash flow positive properties, you have a lot of outs, right? It's hard to lose if you're in this game for the long haul and you invest in assets that pay for themselves every single month. So
we also didn't have a team that had been doing it for 14 years and had been through it all either. That would have been nice.
I'm glad you took us down memory lane a little bit, because I wanted to do a little bit of that too, right? I know that you guys talk about MOI and the effect on short-term pricing for MOI, and I was hoping that you could tell us where MOI is right now. This is months of inventory for anybody that is new to these calls. We talk about MOI a lot. I was hoping that you could give us an update on MOI right now and compare it to that slide of 2006 through 2008 and where it was then.
Absolutely. So months of inventory. So the metric, how it works basically is you take all the properties that are listed on the market. So let's say there's 6,000 properties out there on the MLS, and then you divide it by the number of homes that sold in the prior month. So if 1,000 houses sold in the prior month, you take 6,000 divided by 1,000, and you get a number of 6. So there's 6 months of inventory. If no new homes were listed at the current rate of sales, it would take 6 months for all the inventory to be gone. And it's a great leading indicator because months of inventory is what tells you if it's a buyer's or seller's market. Historically, 6 months is kind of the inflection point, where less than 6 months is a seller's market and more than 6 months is a buyer's market. And right now we're at 3.46 months of inventory. We have been at or below 4 months of inventory since 2014. So we've had a pretty unprecedented run of low inventory, which has caused prices to increase. So this is why home prices have been increasing, because when you have a month's of inventory of 3 or 4, then you are naturally going to see price increases, because there's the balance between supply and demand. There's not enough supply, and therefore it will increase prices. And we're continuing to see that. So 3.46 months of inventory in April is pretty standard. It's up slightly from last year. It was like 3.1 in April of last year, but still well below historical numbers. And so what we're seeing in the inventory numbers right now is, even though sales overall are down about 20-ish%, that listings are down 25%, 30%. And so there's still a great balance between supply and demand. And the people are not listing houses probably because they don't want a lot of random strangers traipsing through their houses because of health concerns. Some people might think that the market is not strong, and so they're not listing the houses. But it's been great to see that the market's kind of reacted how it should have, and that's why we're still seeing this low inventory. Now, so right now inventory is at 3.46 months. Pablo, to your question, what happened in 2006 and 7 and 8, and how does that translate into what we could see if inventory increased and the market started to fall? Well, so in June of 2006, there was 5.7 months of inventory on the market, and the median home price was the highest it had been to that point. It was $223,000. So 5.7 months of inventory, which was still a slight seller's market, so almost right to that 6 months where there's a balance between buyers and sellers. And so then fast forward a year to June 2007, home prices had decreased slightly to 210,000. So you're talking a less than 4% drop in home prices year over year, but inventory had spiked to 11.17 months. So if you were looking at that as a real estate investor or a homeowner, and you were just looking at the home prices, you would think, oh, well, home prices are down a little bit. They're just a minor correction. Things will be fine. They'll jump right back up. But if you were looking at inventory, you could see that there was going to be a huge problem, because there was way more inventory than was needed, and that was going to cause prices to come down. But home prices, they don't fall immediately. It takes a while for inventory to creep up before you actually start seeing that drop in home prices, which is why inventory is a great leading indicator and why we track it religiously every single month. And so then what you saw in 2007, by summer of 2008, inventory was at 14 months. Home prices were down to 199, so still had only fallen another $10,000, another couple of percent. And then they continued to slide throughout the next 3 years, and that inventory stayed high at that 12, 14 months of inventory for a long time. So now that we're tracking this, we didn't know about this back in the day. I wish somebody would have told us about months of inventory back in 2006 and 2008. But now that we track it, we have a heads up on what should be happening in the market the next 6 to 12 months.
Let's just give them some of the stats, because everything you're saying is very impactful. But when I think you look at the actual number of houses that were on the market then and you compare it to like right now, it's even more staggering, right? So what Alex is talking about, our months of inventory right now is 3.46 months of inventory. That means that we have just about 8,300 houses on the market as of May 1st, and we had about 2,400 sales. So, and I think it's so critical to look at what an actual declining market looked like back in the day, right? Everybody is fearful and we want to understand if prices are going down. Well, we have the data to show what an actual declining market looked like. So we're at about 8,300 properties right now on the market as of May 1st. Back when we had, we'll say December of 2007, we had 16,352 properties on the market in Jacksonville. We had twice the number of homes for sale on the market in Jacksonville at that time. And we only had 905 houses sell, right? So when Alex is talking about tracking inventory is really, really important. It's because when you have these houses that need to sell, if it gets way out of whack, it takes a long time for prices to recover. And that's what you saw in the Great Recession. Right now, we have half the amount of inventory in the market, right? And we have, double the amount, 2.5 times the amount of sales as that 1 month I was quoting. And so I think the length of time that it takes for a market to move is really important to take into account now. And when we talk about the market being strong, this months of inventory indicator is the principal place that we look at to determine that.
Yeah, and also the one thing I do want to point out too is that 2008 was really an aberration. That was a real estate, a recession that was caused by a real estate crash, which had never happened before. You go back the prior 4 recessions, home prices didn't even fall during the recessions. They actually increased on average in the prior 4 recessions in 2001, in 91, and 82, and in 1980. Home prices actually increased. So we don't think we're going to have anything close to 2008. I mean, that was a recession that was caused by real estate and the crazy lending practices that just are not in existence right now. So just 2 totally separate things what we're dealing with now in 2008. But the lessons about inventory hold true, where we know that inventory is a leading indicator, and that's why we track it monthly.
That makes a lot of sense. And I have a couple of questions rolling in. I got a great question from Scott about jobs, which we're going to get to. We're about to talk employment in a second. And a great question from Kenyon talking about the eviction moratorium, which we'll talk right after that when we get into rent collection. But Eli Verdura from Miami, which, by the way, my hometown, Eli, hello, has an interesting question here. It sounds like home prices aren't going down, but maybe there's an opportunity out there for someone. So she asks, are you guys buying at the same prices before COVID-19? And if not, how have you adjusted your buy/offer prices?
Yeah, so we lowered our offer prices a little bit, thinking that there would be a lot of other investors that were scared and not entering the market. So there should be more kind of as-is inventory, homes that needed a lot of repairs. But home prices have not really dropped on that side either. I mean, when homes that need work, that would traditionally be the type of homes that we would buy, when they hit the MLS, they're still going multiple offers. So we've really adjusted back up to kind of where we were pre-COVID. We thought we could get some steals, and it didn't really materialize like we thought it was going to. So,
and we buy a lot of new construction lots. That's the vast majority of our inventory. And in our cash flowing neighborhoods, many times we're the only game in town as far as who's buying lots. So our prices on lots were low before in order to make it work for cash flow for our clients. And, they're still low. Couldn't go much lower. So hasn't had a huge impact on it.
Great question.
Interesting. I think
it's a great question.
Yeah. I think that was a very insightful question. That definitely sees, like it's obvious that you think, maybe we can lower the price and you go for that, but then the market tells you what's really happening out there, right? So let's move. So that's home prices, right? Which matters, but in the short term and as a rental income property investor, you're thinking more long term, and if you're staying for a cycle, should matter less. Let's talk about some stuff that may hit the pocket in the unemployment numbers in Jacksonville, since that affects your renter. Can you give us an update on how the employment numbers are doing in Jacksonville right now, Alex?
Yeah, so I mean, unemployment numbers everywhere are not looking great right now. But Jacksonville is doing better than Florida and the country as a whole. So, the latest unemployment numbers, Jacksonville was at 11.2% unemployment. Florida was at 12.9%, which was up from, I think Florida was like 4.4% in March. So we're doing better, almost 2 points better than the rest of the state. I think the country was even higher, was over 14%. And that speaks a lot to Jacksonville's kind of diverse economic base. So we've got finance, a lot of finance industry, which was not really shut down. Logistics, which are shipping stuff all across the country right now. That's how everyone's getting anything that they're buying, because a lot of people aren't going to stores. And healthcare, obviously another big economic driver in Jacksonville, big industry, and they've been obviously very busy in this time. So because of those fundamentals that make Jacksonville a great place to invest, we're weathering this storm better than the rest of the state, which I don't know if you guys saw. I think you guys did a spot on it, but Moody's a couple weeks ago ranked us as a low risk city. So Moody's Analytics did a bunch of a data dump, and they did an analysis on every single city in the country and how its economy would recover from COVID, and they ranked us as an economy in Jacksonville. They ranked us as an economy that was likely to recover. It was low risk due to COVID, which has proven out, because that's why we have lower unemployment numbers than the rest of the state and the country. And now how that will affect in the future, obviously high unemployment numbers don't bode well for people paying the rent or paying the mortgage or those sort of things. So there could still be some economic pain from that. I know that the stimulus has been really helping that out. And now hopefully with people getting back to work and the states reopening, that those unemployment numbers should go down pretty dramatically. And from what I've been hearing and seeing, if there is still more of a prolonged effect, then I think the government's ready to step in with another round of stimulus, which should help. But right now, unemployment is definitely something to keep your eye on. And if the unemployment numbers stay high past or stimulus expires, that will cause some distress in the market. Now, the distress just means probably inventory will go up. Right now we're at 3.4 months. It could go up to 5 or 6 months, and it won't cause any pricing issues, but it would cause some sort of distress in the market.
I was just going to say, I think that's the questions that I get, especially in our group. It's how can I rectify these staggering unemployment numbers with a real estate market that is still continuing to go up, right? And this isn't the only place that you're hearing that market values have gone up, even as we've started to deal with coronavirus. Like the Wall Street Journal came out with an article and said basically the same thing that Alex is sharing with you across other markets in the country. But I think people are hearing these huge unemployment numbers and they're thinking, how can people pay rent, right? And then they're thinking, how can people afford to go out and how can people get a loan to buy a house, right? To people who are wondering how that's happening, we can talk a little bit more in detail about the stimulus packages and what that means, but what would you say to people? Like, why can both of those things make sense?
Well, I mean, it does take a long time for economic distress to affect the real estate market, like we talked about during the Great Recession. So that's one thing. But the other thing is that, what you're seeing in each market is not the same. So you're going to have a very localized effect from COVID and unemployment numbers and how they are going to affect the real estate market. In markets where real estate was not considered an essential service and they're shut down, you're seeing a lot more distress in those markets. So luckily, Florida seems to have handled COVID pretty well, where it hasn't had as much of an impact on the real estate market. And it's very early. So people do have the stimulus right now. So they're using that stimulus and that unemployment to pay their rent, to pay their mortgage. And what we think is that when that stimulus does start to wear off, the economy will be reopening, and those people will get back to having jobs where they can continue to pay their rent and the mortgage. Now, everyone won't. There's definitely going to be some people that aren't, but we don't think that it will have a dramatic enough effect to cause home price declines. So.
And the reason that you feel confident saying that is because going back to MOI, we have such a healthy market right now as far as prices, and it would indicate that there would be upward pressure on pricing right now, if anything, right? 3.46 compared to an equilibrium market of around 6. But the other thing that I want to make sure everybody on the call understands is how dramatic this stimulus package is for those unemployment benefits. And so when people are asking about how are people continuing to pay rent, well, it makes a lot of sense. If you go on unemployment, what the government did through the CARES Act is they contributed an extra $600 a week for anybody who is on unemployment. And they did this for the first 4 months, all the way through the end of July, right? And how that compares in the state of Florida, if you went on unemployment pre-COVID, the max payout you could get was $275 a week. So if you are on unemployment right now, you get that $275 plus an additional $600 a week for 4 months, right? That is going to be either the same or in some cases more than what you were earning when you had a job, right? So that's how people are still paying rent, and that's how people are still paying for things. Now, they can't go out, if you're on unemployment, you can't go out and get a loan because you don't have a job, right? But that's a little bit of insight into how things are actually working for rental properties right now, why you have staggering unemployment, but you don't have problems with rent collection, which I know we'll get to here in a little bit.
We will. I also want to say something. You mentioned about how we chat in our group. For everybody that's new on this call, we do have a Facebook group that you can find at jwbfacebookgroup.com. And that is where we all hang out throughout the week. We call it our little cool club, and Greg goes live in there. We answer questions throughout the week. We love to interact. So I highly recommend anybody that wants to join that, That's jwbfacebookgroup.com. And also, I'm going to ask real quick, I have a bunch of great follow-up questions from Ernest, from Rami, from Scott, from Brad, Kenya, and Mike. I'm going to lead off with Charlie's question right now, but I want to get into just rental collection while we're still in the half an hour mark. And then we're going to stick around and just go a little longer and ask some of these follow-up questions for everybody. But if you're hearing anything, you want a personalized response, go to chatwithjwb.com. That's the best way to get the most accurate answer for you. And I promise you it'll be a positive experience. So with that being said, let's talk about rental collection, right? I think Charlie in the Q&A box framed it nicely. You've discussed the resale market in Jax. What is the status of rental demand in Jax, and how will this impact potential investors? And I thought maybe you could start with where your rent collection numbers have been since COVID started.
Yeah, I'll take that one. I've heard Alex talk enough here. I'm like ready to jump in the game here. I'll take that one. So rent collection has been a really fun topic for us to talk about. For those who have been on the call for months now, you heard us in the beginning say, you know what, we don't exactly know how this is going to land. We're all, we're going to be conservative, right? I was telling people that you should expect a short-term temporary loss of rental income because who the hell know what was going to happen with coronavirus, right? Call it 2 months ago, 2.5 months ago. We didn't know what stimulus package was coming. We didn't know how this was all going to land. It was just a time we didn't know. Well, now we know a lot. We've been through a month in April, and we're almost through our month in May, so I can give you accurate reporting. So a normal month for JWB pre-COVID would see us collect on average 98.5% of rent. Even though we were dealing with COVID all through the end of March and all through April, would you believe that our rent collection at JWB was 97.5% for the month of April, which is an incredible testament to the team, to our property management team, to our ability to put the right residents in, but to keep those relationships with those residents who are enduring very difficult times, right? And mind you, this is a time where you could not evict somebody if they weren't paying rent. Right? We are going based on our relationship with residents. And so, yes, so 97.5% is where we came in at the end of April, an incredible accomplishment. And now May is upon us, right? We can track where we were in April to the date versus where we are in May. And I have even better news to report in May. we're actually doing better in May as a percentage of rent collected than we did in April, which is great. If you ask Alex and myself, right, when we see our rent collection numbers, like, we are so proud of our team, right? It is amazing that they're able to do this. It was better than our own expectations by a long shot. But to put it in perspective, through April 25th, we were at 90.3% of rent collected for the month of April. Through May 25th, we're at 91.2%. So almost a full percentage point higher, which is a great indicator that we're going to continue, a very close month to what a normal month would be for rent collection, even during this trying time.
Yeah, it's pretty incredible. We definitely blew away all of our expectations. And like you said, just huge testament to the team, doing an amazing job.
You don't seem very excited about it, Alex.
I'm fired up about it. It's pretty unbelievable.
Can you throw a chair or something? Get excited. Give me a yell.
We're good. No chair throwing yet today.
Alex keeps it cool over there. I would fail to not bring up, I know there's only a week left, but who's that? That's that question. Charlie, if that is a concern to you, I know that JWB extended a mortgage payment guarantee through the end of May. That they started in April, they decided to extend it in May. I don't believe it's going on through June. But Greg, do you want to kind of talk through what the mortgage payment guarantee is for anybody that's a main concern for them?
Yeah, absolutely. So in response to COVID, I know there were a lot of question marks, and we didn't have the benefit of seeing these incredibly strong rent collection numbers to share with everybody. And I knew that people were going to be concerned as far as how much rent would be collected. The last thing we would want to do is bring a client on into a negative cash flow situation. So we did something that we've never done before. We did something called a mortgage payment guarantee, which meant that for any clients that purchased a property and put a property under contract, and this goes through the end of May, so you got less than a week now, but through the end of May, for the first 6 months of ownership, if there was an issue with rent collection, JWB would make a payment equal to you to what your mortgage payment would be, which would remove the possibility of negative cash flow for you and would just secure that you'd be in a great place for your investment purchases with JWB, even during a time like coronavirus. So we did that in March. We did that in April. We extended it through the end of May. We're not going to be extending it past the end of May. So if it is something that you are interested in, and you want that extra bit of peace of mind beyond just the great rent collection numbers, I would encourage you to go to chatwithjwb.com and talk to our team, and we'll walk you through how that would work.
Great. So speaking about rent collection and the moratorium, Kenyon asked a question a little while ago. Do you know when the eviction moratorium will be over, and do you think that they will extend it?
I believe it's currently set to expire on June 2nd, and I haven't heard any indications that they were going to extend it, but I haven't checked in the last couple of days. I don't know, Greg, have you?
Well, so there's a couple of different things to pay attention to. So there's the Jacksonville, like the Duval County moratorium, or I think that's the statewide moratorium, which has been, statewide. It was Jacksonville originally till May 18th, then it became statewide through, I think, June 2nd. And I don't know if that's going to be extended. But something else to consider, if you have a mortgage that is backed by Fannie Mae or Freddie Mac or any of those government-sponsored entities, under the CARES Act, you cannot evict on your resident all the way through July 27th. So that supersedes everything. If you have one of those mortgages, and you can check that, I put a link to a way that you could check in the group. You'd have to go back a little bit to look it up, but you could go and find that there. I'll repost it. And then beyond that, you have to give another 30 days after you notify somebody on July 27th. So it's really to the end of August. You can't evict based on the type of mortgage that you have. And something else to keep in mind, there are new stimulus packages that are being thrown around right now. They are all over the board, but the HEROES package is the one that has been presented. And that has even longer potential moratoriums on evictions amongst a number of other things. So we're paying close attention to it. But as of right now, there's June 2nd for the state, no matter what mortgage you have or no matter what financing or non-financing you have on it. And then depending on the type of mortgage you have, really through the end of August, you're not going to be able to evict.
Okay, great. And sounds like y'all aren't really needing to pull that lever to get high rent collection numbers, right? So again, that's probably more of a wide market thing, but it's only gonna, I guess, help things if you're able to evict for the last percentage, maybe. I know that you're a big fan of dealing with compassion, so it's not really a lever you're trying to pull, right?
We want to keep people in our homes. That's the way that investors win in the long run. And we're going to do anything we can to make sure that we're treating our residents with compassion right now. It's just a wonderful thing that we're able to do that, and we're able to get high rent collection numbers. We don't have to make a choice. So we're going to keep on keeping on.
I agree. That's awesome. While we're on the subject of rent, now we're going to kind of dive back through the conversation because we have some really great follow-up questions from before. But while we're on the topic of rent, Rami Kara had asked, what is the rent percentage increase on an annual basis since 2007? Do you all have that available? Do you know how much you've increased your rent since 2007?
Hey, Rain Man, what do you got over there?
I don't have our rent numbers going back that far, but Zillow has a bunch of good rental data. I mean, as good as it is on Zillow, and I want to say it's in the low threes, even dating back to 2007. What happened is that in 2008, there was a 2-year period, like I think it was 2007 and 2008, that rents fell about 4 to 8% total in that 2-year period, and then they bounced back up within the next 2 years. So rents fell slightly and then recovered very quickly. And then continued to increase after that.
And that's largely driven by supply of housing, right? So when we're talking about rents potentially dropping at those points in time, right? We had 15,000 houses on the market at that point, right? You know, Alex, I don't know if you have the stat or whatever, but that John Burns article that you had was talking about rent increases recently in Jacksonville. I think, correct me if I'm wrong, because I'm kind of off the cuff here, but didn't they say Jacksonville's rent increased more than, I don't know, any other market in the state or something like that? I don't know. Bail me out here.
Nah, can't bail you out. I'll look it up and we'll get back to everyone.
We'll get back to it.
I'm not gonna make it up. But in the long run, in Jacksonville, you have over 3% rent appreciation even through 2007. Recently, it's been higher. It's been the 4 and 5% numbers. And with that slight dip in 2007, 2008, you'd probably be right around that low to mid 3% consistently since 2007. It's a great question.
Yeah, definitely. And Rami, I made a note here to send it out to the team so they can follow up with you with that actual number of what the increase has been. So, Greg, at some point you mentioned in a neighborhood you want to own property, which I can only imagine is what spurred Ernest's question here, which is, what are the Jacksonville districts that you keep your eye on? I don't know if this is a Greg or an Alex question. I think it's maybe.
I'll take this one.
Yeah.
So, we really focus on those kind of B and C markets. So, great working class neighborhoods that are going to have lower prices than the median home price, because that's where you get the cash flow. You need to have lower prices to make those numbers work. But we stay out of the D areas, stay out of the high crime kind of neighborhoods. So those, like I said, B and C class neighborhoods. What that means, what B and C class means, is that if you rated all neighborhoods A, B, C, and D, A's are typically too expensive for us. B and C is where the 99% of JWB's purchases are, and then we stay out of the D markets. And in Jacksonville, that's the south side, the west side, the north side around the Trout River. Most areas, surrounding the suburbs of Jacksonville.
Okay, great. And there's a couple questions here about kind of strategy and future strategy. The first one is Scott Frank that is asking, did I hear that you're buying lots and building? If so, will you have duplexes or quads? And I think Scott made a couple of assumptions here that you're probably going to clear up.
Yes, so we are buying lots of lots. We love lots, and we buy lots and lots of lots. And so we do a lot of new construction. We built over 400 houses last year. We're on track to build well over 400 houses this year. We're starting to experiment with duplexes. We don't have anything for sale just yet. Cohen would probably be able to answer that better than me. But in the future, it might be something that we could have in small amounts for clients.
I just did a real estate walk and talk about multifamilies versus townhomes, because we get this question about multifamilies a lot. And our answer is, the housing stock in Jacksonville just isn't conducive to multifamily properties. It's just not the same way here. Wasn't built that way. Like it is in the Northeast, you have a whole bunch of multifamily properties. So we have no problems with multifamily properties. It's just to be in the right neighborhoods in Jacksonville, you're just not going to see them. And then it's harder to build them than it should be. You have to make sure that you have, and Alex could tell you all about the challenges with the right lots and codes and variances and all that other stuff. So it's just not easy to do. But what is easy to do that we have been building for a long time, and what gets you many of the same benefits, are townhomes, right? So a townhome may have 4 units under one roof, just like a quad has 4 units under one roof. So you get the same economies of scale, right, when it comes to mitigating expenses and also mitigating vacancy. But the only difference between a townhome and a multifamily property is the ownership, right? So in a townhome, that townhome building with 4 units under it, you could have 4 individual owners, or you could own, one owner could own all 4 units, right? In a multifamily property, it's definitely one owner owning all 4 units. So one of the benefits of townhomes over multifamilies is the ability to be flexible, right? The ability to figure out exactly when you wanted to sell one of these units, or if you wanted to refinance one of these units. The flexibility you have for townhomes is there. You don't get that same flexibility with multifamily properties. And, quite frankly, in Jacksonville, you're just not going to be able to build up a substantial portfolio of multifamily properties in the neighborhoods that Alex just described, right? Those neighborhoods that we focus on, those cash flow sweet spot neighborhoods. So if you're interested in multifamily properties, you should definitely be interested in townhomes, because there's a lot of the same benefits, and actually a few more benefits that you get, especially on the resale side. So definitely something to take note of. In fact, Erin O'Neill, I think we just did that walk and talk, and if Erin's still on the call, she's one of our clients, because she reached out to me right after we did that walk and talk, and I think she might have picked up either that one or one very similar to it. So congratulations, Erin, for adding a new property. And those townhomes, there's just not a difference. You shouldn't look at them differently than multifamily properties for many, many things. The financing can be a little bit different, which you can talk through, but they're there.
Okay, great. And if I'm hearing you correctly, right, he asked, will you have duplexes or quads? Am I right in thinking that most of what JWB builds are single family homes?
Yep, absolutely.
Okay. Yeah, so there's your answer, Scott. It's mostly just single family homes and some townhomes as well, right?
Yeah.
Perfect. You just talked about a bunch about neighborhood classes. Eli Verdura asks, what websites do you use to figure out neighborhood classes? Is there a website or a good resource?
No. So, well, how we do it is we just know the neighborhoods in Jacksonville. They're buying, 4,000 some odd properties. So we have our own definitions and how we define the neighborhoods. I wouldn't have a good resource that has defined neighborhood classes. It's just somewhere you could go. So, there's websites like Zillow and Trulia have information on crime statistics and some of those things that you can use, but they're not always 100% accurate. That'd probably be the best place to start.
I think you just want to go to a trusted resource, boots on the ground, right? If you're a JWB client, you're coming to us to talk about the metrics and the neighborhoods and why. If you're not a client yet, you can go to chatwithjwb.com and start that conversation. It's really, it's a lot of highly localized experience that you're going to get.
Great. And while we're on the line of kind of data checkers, Brad Bone asked, where do you find the unemployment rate for Jacksonville? And do you know what the unemployment rate was before COVID-19? So if we're at 11.2% now, do y'all have that handy at all, or where you got the unemployment rate from?
I read it on the Jacksonville Business Journal. So the only thing about the Jacksonville Business Journal, which we love and we support, a lot of their information is subscriber only. So I can post the link, but I don't know if you'll be able to see the same article because they limit it out. But we'll make sure we get that link to you, and hopefully you can read the same article.
All right, Brad, I'm going to take note here to send you that link. Mike Foster has a question. Roughly how many Jacksonville properties is JWB targeting to purchase this year and in 2021? You got that off the top of your head?
Yeah, we're looking to buy about 700 properties this year, and we've been on track for that. And that includes homes and lots. We really, one of the things that we think separates us, the number one thing that separates us from other people out there doing similar things is our team. And the second thing is that we have inventory. So it's a lot of times it's hard to find great turnkey rental properties nowadays, but what we do is we try to really stock up on our lot inventory so that even if we didn't buy another single property, we could have 2 years of supply and be able to provide great cash flowing properties to our clients. So the goal this year is 700, probably be pretty similar next year, and make sure that we've got enough for all of our great clients out there.
That is one of the big eye-opening things for me when I first got involved in the JWB ecosystem. The fact that y'all have this like 3 years of inventory lined up and you're able to meet demand where it is, as opposed to like retrofitting demand into whatever's happening, man. I think that's really remarkable. So I'm glad we got into that. Charlie Shippey has a question. It's more of a statement, but he says, I'm curious about the rental properties versus renter demand. Is there anything that, I know that we talked a lot about how we were tracking months of inventory for housing pricing and housing demand. Is there anything we can steer him towards to know more about rental properties versus renter demand?
I can tell you just we manage, over 3,500 single family homes. So we've got a lot of this information. And I think, Cohen, you got the same email. Last night, our CEO, Adam Eisman, sent out an email really bragging on our leasing team. So we've, even during COVID, the leasing team has been just performing phenomenally. I'm just reading this email here. So we rented 31 homes last week. We've been averaging over 25 leased homes a week since the start of the coronavirus shutdown, which is right at our typical pace. So we've seen very little slowdown, even in the number of homes rented, moving in a ton of people. So leasing demand has still been very strong. We're seeing our leasing inventory decrease dramatically, our days on market decrease dramatically. So the rental market has been very, very strong throughout this. It has been for the past few years.
We actually rented more homes this April than we did in 2019. And there was this little thing called coronavirus for this April. So that was really cool. A lot of people ask, how can that be possible? I think sometimes when we share some of this really great news, people are like, I don't understand, right? People aren't seeing houses. People aren't doing these things. Well, part of the reason that we're able to function this way is that we have been doing remote showings for leasings for years now. And so while we had to make some changes due to going completely remote for our team, one thing that was very easy to go remote was how to rent houses remotely. And it also worked with social distancing practices. And so, and then quite frankly, there were a lot of people at home looking at houses as well, right? So, that's where that demand was. People still needed to move. They still were okay with going out and seeing houses remotely. People, once they become qualified, once they, give us their information, we make sure they are who they say they are, then they can actually go and view a home by themselves. They're given access to a home. And so that was a decision we made years ago. It has worked incredibly well now through coronavirus, whereas other property management companies, many times still, they would go and meet people and try to show a home. So a completely different dynamic. And that's one reason. The bigger reason is our team and the resiliency and the ability for our team to overcome a lot of obstacles in a short period of time. But you combine all those things and it's not that hard to fathom that we would continue to rent houses like we are, and even more than we did in the year prior. So.
Yeah, that's great. If there's one thing that I notice is the scale at which JWB operates is very unique in the ecosystem that you play in, right? Like your property management services being all remote, being very technologically advanced already from the get-go, very good short-term advantage in what just happened. And then also I feel, and this is just an overall feeling I get just from being in the Tuesday morning meetings and hearing all these positive reviews from the tenants, but I get a feeling that the offer that you have out there, right? Like the idea that being a JWB I mean, it's weird to say, but being a JWB tenant seems almost like a privilege in comparison to what you could find in a single family home that you're going to rent. To be able to rent a single family home from an operation that operates the same as like a well-managed community, to me seems like a major advantage in what the risk you can take. And I think that that's known in the market, right? So your rental numbers are usually better off than the market as is. Is that kind of an accurate assessment?
Yeah. I mean, it all comes down to a relationship, right? People going into renting houses, they don't feel like their property manager cares about them or their landlord cares about them. They feel like that landlord or that property manager is basically a bill collector, right? But if you can build a relationship, that's what really allows you to treat people the right way and collect rent in a time like this where you can't evict, right? I mean, what recourse do you have if somebody doesn't pay rent right now, right? But because of that relationship that you build and those other intangibles, you're able to still perform in a time like this. And it's a different mentality. There's other things that we do that other property management companies don't do, like signing long-term leases, which is a great thing for a resident, right? Who wants to move, right? And we basically incentivize them to sign longer-term leases by keeping rents stable, not increasing rents depending on the length of the lease that they sign. There's just a lot of value to this type of, it's a new construction home for a lot of them, or it's just been beautifully renovated, right? So it's a different model, it's a different product, it's a different service, and it all comes together to rent to the right resident and then to be able to collect rent even in tough times.
Great. I got a potential question from Scott here that I'm trying to dial in, Scott. So if you could kind of tell me what you mean by, will you be providing any numbers on new homes and rental rates today? I feel like we've been doing that, but if you can just be more specific in the chat, we'll get to it. 2 quick questions before we get to that and before we wrap up. Eli Verdura asks, besides property management, do you also offer rehab services if we buy our own property?
That is a great question. And the typical answer is no, we don't. We don't handle large scale renovations. However, we will make exceptions. This would be for somebody who is thinking about purchasing their own rental property and then having JWB perform the property management services. So let me clarify there. So the standing answer is no. However, I would encourage you to reach out to us. Go to chatwithjwb.com, talk to our team. There are exceptions that we can make based on the number of properties you'd be bringing over to us, as well as the scope of the renovation required. So it is something that we can be a little bit flexible on. But if it is a large scale renovation, our standard response is that it's probably not something that we would be able to do for you.
Great. And Marilyn Cotterman asks, have your team members moved back into the office yet?
Yes, absolutely. I was just walking around and seeing our team here today. Today is my first day being in the office and running around and seeing everybody. We actually started going back into the office last week. And what we're doing is a group A and a group B system. So we split the teams up into group A and group B. And those folks are on group A. We're in the office last week. Group B is this week. That's one of the measures that we're doing in order to make sure that with the health and safety of the team is paramount. But yeah, it's great to be walking around and seeing all of our smiling faces again.
Yeah, it was great to be on that conference call and see Kate in the office and see people in the office. It was really cool. And I'm going to end with Scott's question. But before we end, I just want to encourage anybody, if you have a specific question, go to chatwithjwb.com, hop on the phone. If you've been listening to us, you're curious, you think you might want to move forward. It doesn't mean that you have to move forward, right? But it is the logical next step. If you want more of a baseline knowledge, if you just like, oh, I just heard about you guys, just hop on this thing, I need to know more, go to jwbwebclass.com. That's about a 45-minute webinar on the principles of why JWB is so successful and why rental income properties are so good for you and why Jacksonville specifically is a really good market for it. So 2 things. If you want to move forward, chat with jwb.com, or you're thinking about moving forward. If you feel like you want to take a step back to then move forward, go to jwbwebclass.com, and that should be a good use of your time, I promise you. And finally, Scott has a question here. What he was asking is, can you talk about prices of homes for sale right now and what they rent for that are available right now?
Yeah, absolutely. So for new construction properties, the price points will be between $160,000 and $200,000. And for a 160,000 property, you're probably looking at, what do you think, about 1,150 or 1,200 or so in rent, Alex?
Yeah.
Yeah. And then upwards to a $200,000 property, you're probably looking at maybe 1,450 or so for rents. And then renovations we do as well. We believe in renovations, of course, as well. It's just a smaller part of our inventory. And renovations will be a little bit less on the budget. So, you know, maybe about $140,000 at a minimum for a renovation. And then townhomes are a little bit lower as well, generally somewhere around, you know, 160 is a good estimate for townhomes as well. So townhomes are a good way to get into new construction at the lower end of the price point as well.
And is that all? You have to provide the cash? Do you provide financing? You want to elaborate on that a little bit?
The vast majority of our clients purchase with conventional financing in place. We do have some clients that purchase with cash. It's just dependent on the goals that you have, and we can certainly help you build the right strategy there. But financing is pretty typical for our clients, and we facilitate that. So, you know, not every lender is created the same and created equal. You really have to work with somebody who knows how to lend on turnkey investment properties in the state of Florida, who has jumped through the hoops. So we have vetted our lenders, and, you know, we would make them available to you. It is required that you work with a lender in our network so we can make sure that the loan actually does close. But the lenders are all vetted for lowest rates and to make sure, number one, that they can close on the property. So that's a service that we certainly do for clients all the time.
Great. Thank you, gentlemen. I really want to thank, we still have 28 people with us here on the call. We have another like 10 plus on Facebook. Really, really appreciate people dialing in. I mean, a couple of people that we see almost every week that I'm just picking out names. If I don't call your name, I'm sorry, but Richard Gill, Richard Glover, Mike Foster, Katie Derringer, Marilyn Cotterman. It's super great to, you know, see we have this little tribe of folks that show up every week, and we love it. And we love growing those relationships. So thank you so much for taking time out of your day to hang out with us. It really, I know it fills my bucket. I know, Greg, for you, I know you're into it. Alex, thank you so much for making time to be with us. Really informative. And I'll leave it to you, Greg, to kind of sign us off. Oh, by the way, I'm going to leave this on. So if anybody has any more questions that you want to populate, I'm just going to turn off the video, turn off the mute. So if you want to think about it, we'll get back to you. And we would love to have you join us on Thursday for our the next episode of the Not Your Average Investor Show, where it's more me and Greg breaking down the week and taking more questions, and just it's more crowd oriented. So thank you so much for everybody being on board. And Greg, I'll let you sign us off.
Yeah, thank you everybody for being here. Alex, always good to spend some time with you, brother. Never get enough time with Alex Sifakis. He's like my twin brother from another mother there. So appreciate you coming with all these stats and really giving everybody just an overview of what we're seeing on the ground here. And I think we're going to do this a lot more often. So get excited, because you're going to get a whole bunch of more invitations back to the Not Your Average Investor Show.
So excited. Love being here.
So, well, good, man.
To hang out with you. Yeah.
Not like we don't hang out enough, right? You saw me yesterday at my house for my fish fry. You live 3 streets away from me. And now you're hanging out with me virtually on the Not Your Average Investor Show. But thank you, buddy. Pablo, thank you again for doing an incredible job. Your IT face was just sparkling and beautiful today. You are really working on that. I can tell in the mirror you were practicing that. So well done, brother.
Thanks, Greg. You're right. I do really work on keeping my eyebrows and my brow to not move while I am really furiously trying to not, like be in fear of something going wrong here with the technology that I have no idea how to solve. So thank you for acknowledging that.
The practice is paying off, buddy. And thank you to all of you. We've got over 20 folks here. Thanks for hanging out with us. We like to have a good time, and you guys make this incredibly fun. So we will catch you on Thursday at 12:30 for the next Not Your Average Investor Show, and have a great one until then. See you.
All right.
Yeah.